Okay, it's time for the next lecture of Financial Statement Fundamentals. And in this lecture, we're going to talk about the IASB and the FASB and financial accounting standards that come from these organizations. Now, earlier we spoke about GAAP or GAAP, the Generally Accepted Accounting Principles, and we spoke about them in relation to financial accounting and management accounting. However, if I needed to be more specific, I would say that the GAAP or GAAP is more of a generic term, or could even be viewed as a more USA-centric term. What I was trying to express when I was using the term GAAP in the earlier explanation is that I was trying to explain some sort of formal, codified set of financial accounting guidelines or rules. When I explained it before, I was taking the concise, easy option, but now we're going to talk about this more formal, codified set of financial accounting rules. And these rules are known as standards. Standards are the financial accounting rules. And standards give financial accounting guidance on how to account for, present, and disclose the majority of transactions that an organization will come across. And standards limit accounting policy choice. So it's not a black and white situation. There is always some element of accounting policy choice. There's a bit of leeway in all accounting decisions, and the more you take your accounting journey, you'll see that it's definitely not a black and white field of study. But the standards set out by the IASB and the FASB try to limit that accounting policy choice. And it tries to present consistent standards. It's kind of a little bit self-explanatory. There's a standard way of accounting. Okay, so there are two main standard setters, and there's the IASB and the FASB. The IASB is based in London. It's an international organisation, and they set the IFRS, or in other words, to take out the letters or the acronyms, the International Accounting Standards Board, the IASB, sets the International Financial Reporting Standards, the IFRS. The other main standard setter is the US organization, the FASB, and they set US GAAP, or without the acronyms, the Financial Accounting Standards Boards sets the US Generally Accepted Accounting Principles. Now, when it comes to the two different systems, there are a few differences. So they're not identical. The same accounting is underlying both. It's just a few peculiarities that are a bit different. There is, however, a harmonization process underway. So they're trying to bring these two major organizations to have the same set of standards. It's kind of just a bit of a power play at the moment. The American organization wants the IASB to follow the American standards, and the international organization, the IASB, wants the Americans to follow their standards. So it's a bit of tug of war at the moment, and they're trying to work out a way to bring them together. And to explain it further, there's not one standard as in a single standard. There are numbered standards that account for different transactions along the way. And following these standards, these numbered standards, is sometimes mandatory and it's sometimes not. So for many organizations, that have many stakeholders, or they have some sort of economic importance, following IFRS or US GAAP is often legally or regulatory enforceable. Following them is mandatory. So you have to follow them, this way of accounting. Often, in my case in Australia, there's legislation that dictates that the Australian standards must be followed by large organisations. In some jurisdictions, it's just that the stock exchange might say that the standards must be followed. So it's either legally enforceable, or some sort of regulatory agency dictates that they must be followed. But sometimes following the standards isn't mandatory, and this is the case in many smaller organisations. Following the standards and the disclosure requirements can be quite onerous and thus more expensive. So there's often an exemption for smaller organisations or less economically important businesses and non-profits. But if you are able to follow the standards and you can incorporate it into your own organisation, wouldn't it always be better to record and report transactions universally, consistently and transparently whenever you could? So even if it's not mandatory, if it's not legally enforceable or there are no regulations saying you must, it would be ideal if you could implement the standards as closely as possible and do your best to follow best practice. So that's the IASB, the International Accounting Standards Board, and the FASB, the Financial Accounting Standards Boards. And now you know who's at the top of the pyramid and now you have the power. The IASB and the FASB restricts financial accountants on how to behave and ultimately limits accounting policy choice. Even if they're not followed 100% by the most smallest of organisations, it's always good to look to the top of the pyramid. And talking about you have the power, next time someone in accounting tells you that this is how it's done, or this is how you record a transaction, or perhaps this is how you record revenue, you should always ask or even check yourself if that's an even better situation, if they are following or using the IFRS or the US GAAP, the US GAAP. And here are the websites. It's just ifrs.org or fasb.org. The accounting language is a bit convoluted sometimes, but once you get the hang of reading the standards, they're pretty straightforward. Just takes a little practice. Thanks very much for your time.